Good afternoon, Essentials Room, or good morning, and good morning, YouTube Live. So, what are we talking about today? Well, I just opened a futures account. I've hardly ever traded futures, but I have so many subscribers tell me I should trade futures. And I'm telling you, the biggest thing to do is to watch on how things act in relation to other things. This we nailed yesterday. I'll give you an idea. So and I'm going to go over also some misnomers when it comes to moving averages and all that. But I want to show you this. So one of the biggest things I watch now, just to let you know, when I dual broadcast, a lot of times the screens go down. So let me see if I can make this better. So this is what I want to show you. I look at things in relation to other things. What do I mean by that? So I look at this. So I think a lot of indexes are interrelated. So I'll show you what we're talking about. So if I'm watching certain things, now this is my setup. I use a 9 EMA and a 200. A 9 EMA and a 20 intraday only. I just can't tell you enough on how I think a lot of people make mistakes using moving averages too literally. One of our mantras is about using moving averages in combination with other things, and that's all fine. But I want to show you what we're talking about daily in relation to each other. So like I said, a lot of indexes are interrelated. So here's the S&P in relation to this. So all I'm doing is on a daily, I'm using a 20 and a 50. But at the moment, I don't really care about the 50. Like I said, though, the biggest thing is price support. On the way down, you can use it any way you want. On the way up, bless your heart. That's fine. But on the way down, it's animal spirits. And you got to look at prior tops or prior bottoms as support. It's worked a lot. So let me just show you what we're talking about. On the right is the Russell. I'm going to take off everything other than the 20 moving average. And I'm also going to keep up the 50, and I'll show you why. So the Russell has been lagging. So you're going to see that when the Russell 2 days ago went to the 20 moving average, this is why I harped yesterday on the S&P was going to go to the 20 moving average. That's all. Not because it was going to go to the 20 and bounce because the 20 is some magical support whatsoever. But if the Russell was at the 20 and the Dow is at the 20 or under it, as you see on the left. Oh, give me 1 second. The pointers are messing up. A lot of times when we dual broadcast, this happens. So just bear with me while I exit some other applications. But it's all about relationships. That's number one. So like I said, world markets, US markets are tremendously interrelated. So if some of the indexes have gone to their 20 moving average, then the probability is other ones are going to go to the moving average. So just keep that in mind. And like I said, I'm getting one of those performance problems detected. So just give me a second to get this working. Ever since Schwab took over Thinkorswim, there have been a lot of performance problems. All right, let's see if it works better now. So the thing in here is all about interrelationships. Like I said, if this starts messing up, I'll just use Task Manager again. But this is what I want to show you. I just can't stress this enough of how important this is. So what you're seeing in here is this. You're seeing the Russell is under the 20. You're seeing the YM is under the 20. So on the left, I'm going to put the ES, and you'll see the disparity. So it's over it right at the moment. But you got the Dow, you got the bonds, you got the transports, you got the Japanese market. So just keep that in mind in there. And if you see all those indexes continue under the 20, then the likelihood the ES ain't going to a new high. In fact, the likelihood is any kind of bearish pattern is more likely to work. So just keep that in mind in there. That's what I showed when I was on Trader TV yesterday. That's what I'm showing now. So then you fast forward to the next thing. So go and look at the red line. That's the 50. And like I said, do not trust this thing about the 20 is some magical thing. If the 20 was a magical thing, how come all these indexes have not stopped there? That's how you bust out in this business. Sorry to be ugly, but you bust out by thinking there's a holy grail of a certain moving average. Totally not true. I looked on Twitter last night. There were 8 million people that showed this. There, that showed that line. Said, yeah, things are stopping there. How well has that worked? Hasn't worked at all. I mean, at all. How about the ES? Well, it works on the way up. I'm telling you, it don't work on the way down. How about, and it works until it doesn't. Didn't work in the Russell, didn't work in the bonds, didn't work in the transports. Definitely didn't work in the China market. As you see, it plunged under it, got over it, got under it. Didn't work in the Japanese market. So I'm just telling you, it might work on the way up if that makes you happy. You can use it. But I will tell you that in the long run, I have not seen that work. Short term, maybe, but I use it in relation to other indexes. So if I see this, and I see the 50, and I see the Nikkei under the 50, and I see the Russell at the 50, and I see the YM, up here, and I see the bonds plunging. Yeah, how did that work with any kind of moving average? It didn't. So the whole point in here is if a ton of indexes are under it, what's going to make the S&P go up? Well, number one is price support. Like I said, if markets do go on the way down, animal spirits, they don't care about the moving averages. They care about prior tops or prior bottoms. As you see, here's your price support. Here's your price support. It's a zone. So all these tops are not perfect tops. I mean, it's a zone. So it stopped. So how about here? Darn right, it stopped. As you see, it stopped. Stopped perfectly. Now, it also helped that the Russell rallied. But what has made broad markets go down? What's made them go down is the bond market, or let's put it this way, they haven't gone up that much. So the bond market going down, the Russell's going down. If the Russell's going down today, the probability is this ES is going down. So the Russell rallied, S&P went up. It bounced. It bounced not from the moving average. It bounced from the support. Just keep that in the back of your mind. Now, what are you seeing? You're seeing exactly what I'm talking about. You're seeing this on the right, the Russell getting nailed. And what's happening? Yep, the S&P is more likely to break down than up. The Russell going up earlier, yeah, that helps the ES. But this is a big disparity. So what happens is If the Russell had stabilized, because the Russell's led to the downside, and it starts going up, and this doesn't go up on the left, then you get the if then that if this starts selling off, that's going to sell off as well. Now, intraday, I don't even use these. I use this. I'll use a 20 and I'll use an ATR trailing stop. So that's it. No more, no less. So I use an ATR trailing stop and I use a 20. And keep in mind, you might look at this and you'll see on the right, this is it. ATR trailing stop in the 20. So why did this work yesterday? Darn right. Look at that. It hit the support. The Russell on the right had bounced. In fact, it formed a little inverse head and shoulders, and it got over the ATR trailing stop. So today, what's happening? Totally different. Instead of these going up, they're starting to break down. So you look at the Dow. The Dow is now testing the low from yesterday, while the ES is still up here. But when you saw this flag, which I pointed out right here, the probability is that bear flag, it's going to break down if the Russell and the Dow have another leg down. Now, you might say, well, bonds are now going up. Well, yeah, now they're going up and they're helping. But the Russell is the key, because the Russell is been a big laggard. And everybody is watching that in relation to the 20 moving average. As you see, the ES is now selling off. In fact, Chart Patterns Mastery, I posted about the short in JP Morgan. And I'm still short JP Morgan. And keep in mind, we're still short the XSP. So just keep that in mind. That's a tenth of the SPX, if anybody was wondering. There. And by the way, Chart Patterns Mastery, that SPX put fly we did as a hedge is a 50% winner. So I'm taking 50%. So I'm one of them. The other one's a 50% winner. We can take that one as well. In fact, every one we've done is at least a 50% winner. So just keep that in the back of your mind. So those pay for any mistakes. So keep that in mind. Now, getting back to it about this, where do I think markets can go? Well, this is the big kahuna next week. So I want you to look at this. Is the calendar. So why am I showing the calendar? I'm showing the calendar because the end of the month, they're 50-50 funds. 50-50 funds. Let me get my Zoom it to work. All right. 50-50 funds are half long stocks, half long bonds. So the end of the month, they rebalance every month. So right now, they're long up the kazoo stocks, not enough bonds. So they're going to have to buy bonds and sell stocks. You're actually seeing a little bit of that today, believe it or not. But usually it happens the last 3 days of the month. It's supposed to happen on the last day, but funds don't have to do the last day, and they usually tape race. Now, you might say, well, I thought you said it's the third Friday of the month. That's the S&P. The S&P rebalances every quarter on the third Friday of the month. So you got June, you got September. They do it at the last minute because that's the way the indexes work. Not the 30th. They take the 20th, third Friday of the month. If you go to the S&P site, they tell you why. Because that's the most liquid day of the month. So they rebat. That has nothing to do with what we're talking about. We're talking about 50-50 funds. So now that doesn't mean to blindly go and buy bonds because the bond market is gigantic and they're different maturities. Might be preferred stocks. It might be 2-year notes, might be 10-year, 2-year bill, 10-year note, might be 30-year bond. So it's big. It's the stocks that matter more. So I wanted to go and try to share this for you. So here's the TLT. I posted this earlier in the chat for everyone. That's the first day of the month. On the right, I'm going to put the SPX. That's the first day of the month. That's a big disparity. Now, the reason I'm doing indexes, I want non-24 hour. So let me see if I can share this. I can't share it in the Restream room. I'm sorry. So I just want to show you this. And by the way, chart patterns mastery, still short JP Morgan. I just want to make that clear. So this is a big deal. I'm actually going to go and put this. If you follow me on StockTwits, I'm up to 55,900 followers. So I'm under Christopher Brecher. You can follow me there. So that's what we're watching. As you see, the ES is getting pounded. It should get pounded. If the Russell's down, then the ES should get pounded. So what else do you notice? Well, guess what? If the ES is this high over its 20 moving average, or it was, let's just put it this way, it was, then why on earth should the NASDAQ be over it? That's why it's sold off. The big kahuna now is number one is that rebalance. Number two is going to be this, the 50 moving average. Like I said, I look at these in relation to each other. I'm not blindly saying go buy it because it hits a moving average. That's bunk. If the Russell plows through it, which it has, what happened if you bought the Russell at the moving average? You get yourself hosed. But now that it's here, and now that the Dow could go there too, then you got to think the S&P can go there. That's 100 points. Just keep that in mind. So when we saw the Russell go down, we shorted a bank stock that had a bear flag. There's your bear flag. Anybody in the essentials room, listen to me about this. There you go. We're short in here. I'm still short JP Morgan, by the way. So I've been short. I'm short a lot. So just to let you know, essentials room, I'm still short. And the reason I'm short is because the Russell went down. And if the Russell goes down, then a stock that has a bear flag is more likely to work. So I'm still short that. I just want to make that clear. So Jack, yeah, I mean, all I'm doing is correlations. If the Russell and the Dow are testing their low from yesterday, then why wouldn't the ES? That's the theory. So I hope that makes sense for everyone. Now, you might ask, where do you buy back JP Morgan? Well, I think it comes down to the Russell. Where is the Russell going to hold? So you got to go to a farther out chart. Go to a 15-minute. There's your low in the Russell yesterday. Where was the low in the Dow? It's there. So JPM is like a Dow-related stock. So where could JP Morgan go? Where was it yesterday? It was here. 222. So how about an hourly chart? Dow's down here. Why the heck can't this be back to 221? So chart patterns mastery, I'm throwing in my bid down here. Now you might be like, why don't you take $1 on half? Yeah, unless I see that Russell rally, yeah, I'll go and do that. Let me go and do that. Money management. Nah, I'm not doing it yet. Let's go to a 5-minute chart. It's at some support, but I've seen this stock have that bloop. So I'm putting in down here, down near the test of this. That's where it was this morning. And by the way, the reason that I have to have my finger on the trigger is companies can buy back stock. They have a big buyback. So when can't they buy back stock? 10 minutes before the close and near the opening print. What was the low in JP Morgan? The opening print. Yeah, isn't that a coincidence? That's the low. Now I'm going to go and buy back half right here. There. So chart patterns master, if you want to go, essentials, if you want to go post that. In fact, let me go in there and put that. Got to put that in there. So bought back half. For a 1-point winner. 1-point winner for you. So, all we're doing is trying to find the easy trade. On the upside or the downside, I am not that just crazy about you have to automatically short just because I did a short selling class. I'll play the long side too in a second. So just keep that in mind. But if I don't see that Russell rally, so everybody and their mother thinks the Russell is going to rally because this time of year it rallies. And that's fine, but it isn't. It isn't rallying. Right now it's at the 50. That gets you scared that the overall markets are going to go to the 50. Now keep in mind, there's a lot of different ways to look at this. I'm looking at this disparity between the Russell, the Dow is getting there. Not the ATR trailing stop. I use that intraday. There, I'm looking at that. Are there so many indexes that are testing the 50 that you just can't chase rallies? That's what you're caring about right here. So let me show you. You can just go down the list. So you could go Japan at the 50 on the left. DE Dow is only added. In fact, if these go down enough, I might try to play like the Germany ETF to the downside. So just keep that in mind. You got the transports down there, even with UPS and Federal Express going up today. So what's above it? Yeah, the NASDAQ and the S&P. That's a big move. So that's what I'm going to be watching. On the other hand, I'm telling you, you got to do money management. So with the stock that has a big buyback like JP Morgan, you got to take your profit on half. Just money management. That's all you're doing is money management. Now, the other, and I think this is pretty cool, is China everybody loved China up here. And we were showing the correlation between this parabolic move in China and the parabolic move in GME in 2021. It's pretty interesting. I'll show you. There were a lot on our site, and I almost did as well, that wanted to sell puts in Chinese stocks when they sold off a bit. And I warned you not to, and I'll show you why. Because in a parabolic move like GME, and you get the gap down, it's very similar. A lot of times they go to at least some semblance of prior support. Now, GME, believe it or not, went all the way back to prior support. Right there. Now, I'm not saying it's going right to there. I'm saying, where's it going to stop going down? As you see, if you use moving averages, you're blown out. On the way down, use price support. It's animal spirits. I just can't stress that enough. So it's animal spirits on every stock, every index on the way down to use price support. So where's the price support in China? Well, I got to think right here. Right there. Now, I'll tell you, we lost money. We're not perfect. We lost money in Baidu. Why'd we lose money in Baidu? Because of this. Yeah, it went exactly to price support. But we got in here. Now, you might be like, why the heck did it go down? And the reason it went down is because there are a ton of the Chinese stocks that haven't gone down yet. And that's the danger, that those could pull down Baidu. That's the only thing I can think. So this has not gone back to prior support. This has gone to prior support. This is not. And that's the problem. It's like they're pulling each other down. So these are trying to go down, even though these are already at support. So I overthought it. Do I think they can go higher later? Yeah, but let me show you what usually happens after a parabolic move. And by the way, even though the ES just rallied, and why did it rally? Because the Russell rallied. It's amazing. If you don't think these things correlate, one of the strengths of our site, or me on our site, is to know what traders are correlating about. And right now they're correlating about the Russell. So I just opened a futures account. I hadn't had one, but so many people said you should trade futures. So when this broke, I would have re-entered shorting futures, but we shorted JP Morgan instead. So just keep that in mind. Where's JP Morgan? It hasn't bounced. Did it have the blip? Almost exactly where we thought it would. Also, measuring implication. Bear flag from there to there. That measures about a point from here. Yeah, that gets you back to here. But I bought back half. Let's let some of it run. But getting back to it with the markets, what else are we watching? Well, like I said, China. Let's go back to China. And you're going to see this, at least it's rallying a little. But after a parabolic move up, this is the FXI, the ETF. You can actually, in TradingView, take the actual futures. Usually what happens is you get the sell-off and the slow rally back up. You'll see. Even here, where you have the spike, you got that sell-off all the way back to support. There's your poster child right there. So just keep that in mind in there. That's the one now, not in 2021. The one in 2021 went to that support. And that's how it ended. It just stopped going, the momentum stopped going down. And then you got a little, like, you could call it a falling wedge, but if you took that on an hourly chart, that would look like an inverse head and shoulders. So that's what we're watching right now. And that's what we're watching. Now, if the Russell doesn't go up, I'm going to play the XSP or the SPX to the downside again. So just want to let you know that. So I'm actually watching everything as we're talking. So just let you know. And this so far has worked according to plan. The Russell pulling down the ES. That's what we're watching. That's why we're short the SPX basically. So just to let you know, when I'm watching the Russell refuse to rally and we're still short half JP Morgan, that's a daily chart. That's ugly. Remember, there's a tremendous amount of stocks that are over their 20 and their 50. If the ES is going to go to its 50 and follow the Russell to its 50, then you're going to need a lot of the biggies to go down. That includes Home Depot, which finally got under the 20 at least. That includes Walmart, which won't go down, and it doesn't have a reversal pattern. Look at the Walmart, and then look at JP Morgan, and you see why I picked on JP Morgan. Yeah, because it's formed a top. So how about Lowe's? That to me is next. How about Deere? Oh, Deere, it just refuses to go even lower. How about Cat? Yeah, that's already doing. In fact, notice the chart of Caterpillar and the chart of JP Morgan. Except Caterpillar's under the 20, JP Morgan's way over it. So if I'm playing anything to the downside, I'm going to play the stocks that haven't gone to the 20 yet. So that's how I'm playing. I'm just talking out loud on how I'm going to be doing it. See, bond selling off, Russell selling off, ES selling off. That's a beautiful thing. So just chart patterns mastery. I'm still short JP Morgan. There. That's why you only buy back half. Because if it rallied, you feel like a genius, bought back half. If it goes down, you're a genius that you only bought back half. If you go on a strict interpretation, how we day trade, you'll see it was more a financial decision to get out of half. As you see, it's under the ATR trailing stop. Now, let me just tell you, we talked about 222.10. Why would you get out of the rest? A lot of times when they get too far from their moving averages on a 1 minute chart, that's where to take in the rest. So just keep that in the back of your mind. When it gets like this, then I might add a 9. Just so I have some reference point of where to get out of the rest. There. At least some reference point. So yeah, I get out of the rest here, but if the Russell has another leg down, I'm not getting out of the rest. We just talked about the blip to 222.15. There it is. Longer term, I think it's going a lot lower. Unless the Russell goes crazy. Now, I know there are a lot of people that look at the AAII sentiment and they look and say, oh, there's less bulls. I'm telling you right now, it's not an extreme. If this was 50% bear, sure, bearish patterns are less likely to work. It's an inverse indicator. But right now, it's a push. So if the Russell goes down, stocks can still go down. The other thing going for you, and we showed this the last 2 days, and it was worth its weight in gold. This is 2 days ago. 2 days ago in stock twits. So I think you have to pay for this, but I'm a beta tester for it. So this is 2 days ago. I only look at extremes. Stock twit sentiment was extremely bullish and the markets went down. That doesn't mean markets have to go down, but then you combine it with those 20 moving averages. Then the first day it went down. This is 583. Look the next day. 582. It's still extremely bullish. That means to me it's going to continue down. Or let's put it this way. Bearish divergences are more likely to result in a down day. Now, I know everybody and their mothers used to only buy. We'll do both. So I just want to make that clear. So that's where we are right now. I think you see what I'm talking about right in front of you. The Dow on the low from yesterday, the Russell testing the low. Then why the heck should the ES go up? I know everybody wants to just buy the ES. You know, we're going up. Well, you see what's going on. All correlation right in front of you. So chart patterns mastery, keep in mind we're still short the XSP around 578. So all the other ones, yeah, you could take your 50% profit like I broadcast. Take your 50% profit. We're thrilled. So multi-charts on you can't with Think or Swim. You can with Trading View. You go to this and you go to symbol or interval. You can't with Think or Swim. It's a pain in the rump. So just keep that in mind right now, that what I just showed you is working perfect. The Russell selling off, the Dow selling off, and let's go and take it in here. Here's the Dow plunging under the 20. Yeah, if you do a 21 EMA or a 20, you're out of this business. Use it on the way down. Use prior tops. That's why it stopped yesterday. Now I'm just using it as a tell. So if I see the Russell plunging under it, yeah, how did the 20 work? Bad. I'm just telling you, on the way down, use price support. The Russell testing to yesterday's low. The Dow testing yesterday's low, actually under it. Then why the heck should the ES go up? So that's how I'm looking at the market. Now, I'm telling you, the other thing I'm going to be watching is this today. Now I'm going to be watching the 50. Only the 50 if I want to do a longer term trade. I'm going to be watching that. I'm going to be watching that 50 because the Dow, you're seeing both of them above the 50. The Russell at the 50. The transports at the 50. The bonds way under the 50. You know, the Russell, transports, bonds, Spain's above it. DE's above it. Japan's under it. Japan, everybody is keyed off of more. That's how we made money in July. So just keep this in the back of your head right here. Keep in mind the Russell in relation to the 50 and the S&P in relation to the 50. And that's why we're not long. So just that's why we're still short JP Morgan. There. And that's been working. And I just explained about Alibaba, why it isn't going up. So just to let you know, they aren't at support. On the way down, price support is your key. You know, I just can't stress that enough. So Alibaba, not at support. Don't go on that. Go on prior tops. That's your support. Now, maybe one candle is support. But if this moving average corresponded to a lot of prior tops, I'd be a lot more bullish. But I'm not now. So, and I'm telling you, the next thing to do, and this sounds sort of crazy. So I'm showing you that 50. At the minimum, the 50. Like I said, we're still short JP Morgan. So I just want to show you some of the other ones. So all I'm doing in here is looking at things in relation to everything else. So you got the Russell is under the 20 decisively at the 50. So then you're like, well, a lot of other things could go there. Like I said, JP Morgan is above both. There, it's above both. So how about IBM? Well, you know, it crapped out on earnings and it went to the 50. So what's the moral of the story? Heck, at the minimum, look for stocks that are over the 20 and play those to the downside if they have a bearish pattern. Remember, when I'm talking about a bearish pattern, I'm talking about over the 20 and it had a bear flag. Right here. Over the 20 and a bear flag. So let's go to it. I'll show you on how one scan. I can't really share the scan, but this is just something you can readily see on Thinkorswim. You go to scan. Take my main list. That's all the biggie stocks. All the biggie stocks. And just take this. Take the moving average is over the 20. Just the close is above the 20. Let's say 5%. You'll see it's going to be, well, you got Tesla, but they had news. You got Lululemon. I'm sorry. It looks like Lululemon to me, not Lululemon. So I'm staying with that. So you can make this 3%. The theory being that all of these are going to go to the 20. You could take 2%. And so chart patterns master, I hope I'm making you some money. There's all the ones 2% above, 24. So let's go to them. Now we're going to, our poster child is that the Russell is plunging under it. That's our poster child. So all we're doing in here is we're going to go to this. I'm going to go to 2 charts. We can go to 4, but we'll go to 4. 4 time frame. As you see, remember I talked about prior bottoms. You look for a reversal pattern. Yeah, prior bottoms here. Prior bottoms or tops. Well, prior bottoms become resistance. At this area, you're looking for the short idea, which worked. So just keep that in mind. So what else are we watching in here? We're watching this. So now we're going to take what I just showed you, the 24. You got the Netflix. Is it over? Now, not on an hourly, on a daily. Yeah, we know it had good earnings. It's over the 20. And when Thinkorswim, I have it that way. I have it as a blue. So what you do, though, why do you have that up? Because you're looking for the trigger. You're looking for the bearish pattern. There's your bearish pattern. Right here, trend line. All right, let's take, well, HubSpot's a rumored takeover. I don't take that one. JP Morgan, we're still short. Still far above it. MicroStrategy. Well, that's all has to do with Bitcoin. I don't take that one. That has its own entity. You know, and you have, if the polls change, they sell First Solar and they buy Bitcoin. Just keep that in mind. Taiwan Semi's too high. NVIDIA, everybody is loving stock. I'm just saying from an algorithm point of view, this better hold. UPS, that's what happens when something gets too far over its 20 in this environment. Yeah, it sold off 8 points. These are the next ones I want to pick on, the utilities. This seems like the dumbest thing I've ever seen, that the bond market has gotten trashed and the utilities have gone straight up. Yeah, here they go meandering to the 20. The problem is it's not a big move. So what else do you have? Fastenal. Yeah, you got that. So just keep this in mind, that kind of idea. So about the 20 and being inspired. Now, I'm telling you right now, if you see this Russell go down enough, so take off the 20. Well, make it the 50. We're going to make this the 50. I got too excited here. There. You see the Russell at the 50. Just take it right here. There's the Russell at the 50. Like I said, you could take Thinkorswim, you could take TradingView. I'm not caring about the ATR trailing stop. I use that intraday. So if you have the Russell at the 50 and you have the bonds way under the 50, as you see, why did it stop? These support. But if you have all that down there, why is the NASDAQ above it and the ES above it? Well, the ES is above it because of prior support. This is a zone. There's your whole zone. Prior bottoms, prior tops. So I'm just going for the individual ones because this is stuck at support. So that's how I'm trading this. And also, keep in mind another thing. When something goes straight up and then goes down, you do not want to buy calls. You're going to get yourself hurt with the premium decay. If you see a bull flag, sure, you could buy in the money calls or out of the money calls. But I've seen more people lose their butt with Microsoft, lose their butt because they bought on the way down. They didn't wait for the bull flag. See the bull flag? So if you buy on the way down, I'm just telling you right now, if you bought calls right here in end of September, and the stock bailed you out, let's say you bought it here on the way down. So the stock's 5 points higher. You're down 50% on calls you bought. You got to buy it on the way up if you're buying premium. That's the problem with Alibaba. When Alibaba and Baidu had that parabolic move, it takes time for it to work off the damage. Just like GameStop, I'll go and show you. Look how long it took it to work off this damage. So it stopped at support. It finally worked it off, but it took time. So if you bought right here and then it had that move, you probably lost money. You need that tight consolidation. That's the way it looks to me. And don't get me wrong, I think China is going to stimulate and all that. But this is the next thing. This is all I really wanted to talk about today, but I'll talk about it next week in the Essentials Room on Monday. And I want to show you this because it's worked. This can help you. So XBI should be going up because of VKTX. It's not. Go and look at XBI on a daily chart. On the right, look at First Solar on a daily chart. And I'll show you something really, really interesting. Now, you don't have to believe me about Trump or, or Vance or Harris. You don't have to believe me on any of this, but this is how traders are perceiving things. What they're doing is they're looking at this. They're looking at polls. So I'm going to the New York Times poll. Now, keep in mind, you could call this the radical left. You could call it whatever you want. This is an aggregator of 400 polls. Right, left, crazy, non-crazy, it doesn't matter. When you see this narrow, you're seeing the solar stocks go down. You're seeing the drug stocks go down. You're seeing the things that benefit from less regulation going up. So you're seeing three areas: China, biotechs, actually four: solars, China, biotechs, bonds. When this narrows, they go down. When this widened, they all went up. I'm telling you, it's worked. That's what traders are perceiving. You don't have to agree with it. You don't have to agree if this is up 1. I don't know if it's up 1. They're saying the margin of error is 4. But I'm just telling you that that's what traders are perceiving. So let me show you what we're talking about. We're going to take on the left the biotech index on a 4-hour chart and solar on a 4-hour chart. And I want to show you something that's a real eye-opener. So when Harris was perceived to win the debate, you don't have to agree with that. I'm just saying perceive, what traders perceive. Biotech went straight up. First Solar went straight up. When Vance was perceived to win the debate, biotech went straight down. First Solar went straight down. What else went down? Bond market went down. People are perceiving. I'm telling you, I'm not agreeing one way or the other. I'm saying what traders are thinking. Traders are perceiving that Trump is going to add much more to the deficit. So that's why the bonds have also gone down since Vance won the debate. Straight down. When Harris won, went straight up. It's not a coincidence. So just keep in mind, Trump adding in the polls, China, bonds, biotech go down. Just keep that in mind. China, biotech, bonds, and whatever else other one I just mentioned. Solars go down. So you got these. I mean, I can just show you. You could take 4 charts. Take 4 charts. Like I said, you don't have to agree with me. I'm really, really in to finding correlations. You saw it with the 20 moving average working beautifully. There. And check this out. Biotechs, bonds, FXI. Yeah, I'm telling you, I know you don't believe me, but it worked. Yeah, it worked. It's just amazing. And solars. Amazing. They all went down when the polls indicated a closer race than a lot of people expected. Unbelievable. Now, you don't have to trade with polls. You don't have to believe me with the polls, but I'm telling you, this has been working and we're going to stick with it. Now, without even looking, I haven't even looked, but what is the Russell doing? Is the Russell bouncing? Russell's bouncing. I bet if the Russell is bouncing, guess what's bouncing? I bet the ES is bouncing. Let's go look. So we're going to go back to here. We're going to go to 2 charts. I don't even have to look. The Russell's led on the downside. It's going to lead on the upside. The Russell just had a nice bounce. And I bet the ES had a nice bounce. Is that a coincidence? No. So the Russell, everybody's nervous because it's under the 50. It held. So the ES went up. So just keep that in the back of your mind today. The polls, so you can have this. Like I said, you do not have to believe me about this, but this is what traders are doing. And I'm just going on what traders are doing. I'm trying to find the correlations for you. So just keep that in mind. So just watching the correlations. Now, there are a couple of other things, and I know I have to go in a minute. So you might say, how about buy on rumor, sell on news? First Solar, that's a whole battleground stock. So you might say First Solar has really gone down so much, and it's finally at price support, that even if Trump gets in and doesn't like solar, I think he said something about, I don't want to get into it, but let's just say, you think Trump's getting in. Well, he's into tariffs. First Solar is domestic production. It actually could go up. The big wild card is earnings next week. Look what Enphase has done. SEDG and Enphase. They've gone, actually Enphase, sorry. Wow. But it's come back. So I'm just telling you, we're very interested in looking at something in First Solar over the market. I just don't know if I want to do it prior to earnings. But that's the kind of creative stuff we're looking. Hey, Russell came back, ES came back. That's not a coincidence. And like I said, if they seem to be moving together. Now, if all of a sudden you see the polls do that, let's say Harris Trump. I'm not saying that's going to happen whatsoever. I'm just saying if it does, you'll probably see First Solar, China go up. You'll probably see the bonds. Well, both are going to add to the deficit. But very interesting to watch this. Very stressful if you're trying to just go on polls. So we're trying to go just on charts. So take care. Thanks for listening to me. I hope you found this enlightening, and I'll talk